SoundCartel.
From SoundCartel, I'm Nicole Goodman, and this is Business Essentials Daily. While most of us are sailing against strong headwinds, one small segment of the SME sector is actually going gangbusters. The 6% of businesses doing well is referred to as the growth economy, and it appears to be Australia's engine house. The Australian Business Growth Fund has been studying this elite group closely, and its CEO and Managing Director, Anthony Healy, says it needs help to reach its full potential. By first defining the term growth economy, Anthony describes the sector to Jeff Waters.
Well, the definition we used for the research was businesses or established Australian businesses with between 2 and 100 million of annual turnover or revenue. So these have to be Australian headquartered, established, been in business for a couple of years, and their turnover revenue between 2 and 100 million.
But how does the word growth fit in?
Yeah, well, what we decided to do was look at this. It's broadly the SME economy, if you like.
Right.
But what we found as we started to look at the characteristics of this segment, they represented a very strong, what we call growth economy. So a part of the economy that's growing faster than the rest of the economy, that punches above its weight in terms of employment, GDP growth, R&D, and is growing at a faster rate than the rest of the economy. So that's why we've identified it as, if you like, the growth economy.
Wow, that's really surprising to hear. I'm sure most listeners are surprised by that. How did you come to this conclusion that the small business SME sector was doing well in spite of what's going on in the economy?
Yeah, well, I think a little bit of it goes back in history to when we first established the Australian Business Growth Fund. We set up this fund to meet a gap in the market, which was for long-term patient growth capital for SMEs. And at the time, there was some insights from the Small Business and Family Ombudsman, from APRA, from the Reserve Bank, and from the major banks. They could see that this gap sort of existed. These are SMEs, founder-led businesses that struggle to raise the sort of capital they need, but are really the engine room of the Australian economy, if you like. So we thought we'd commission independent research to validate those assumptions. And so we went to Eastern Partners and to Strategy And, which is part of PwC, and said, we want to define this segment and look at its characteristics. And so when we looked at the characteristics, we found that these businesses that I've just defined represent only 6% of all businesses in Australia, but they account for 42% of all employment, 26% of GDP, and 47% of all research and development or R&D investment. So despite them only being 6% of the population of businesses, they represent almost half of the economy in terms of growth, in terms of employment. And then when we looked at the rate of growth of this part of the economy, it's growing over the last few years at 5.7% annualised versus for the rest of the economy, if you like, which is made up of large businesses and micro businesses, they're growing at a lower rate than that. So here you have this part of the economy that punches way above its weight in terms of the proportion of the economy and is growing at a faster rate than the rest of the economy, and hence why we've called it the growth economy.
What sort of businesses are we talking about that sit within this 6%?
Yeah, that's right. These businesses, there's 164,000 of them.
What sorts of businesses are they? Are they all sorts of businesses?
Oh, yeah, they range across the entire, mix of the economy.
Are there any patterns that emerge?
Well, what we did see is certain industries and certain regions or parts of the country were growing at higher rates. But if you look at the 164,000 businesses, they would look broadly like the overall economy. They're across retail and logistics and transport and manufacturing and software and technology. And so this is a little kind of like microcosm of the Australian economy, but it grows at a higher rate. And it, as I said, it punches above its weight. And these are almost entirely founder-led, family-owned businesses.
Is this recognised by government?
Well, I think the government would think about it as the SME economy.
Right. But you've pulled out and focused on the growing ones.
Yeah, that's right. We've said, okay, well, you've got all these micro businesses that are just one or two people. They're important and they employ people, and there are a lot of those businesses. They would make up probably 90% of all businesses in Australia. but they're not the ones that are, growing at the rate that this other segment is. So we looked at those that, more than 2 million of turnover gives them scale. Up to 100, above 100, they become large businesses, if you like. So it's really zeroing in on this core segment that the Australian Business Growth Fund focuses on and invests in.
All right. To what end?
Well, we wanted to first of all highlight the importance of this sector to the economy. And then once we had highlighted that, we commissioned Eastern Partners, who are a research firm, to interview, I think they interviewed 3,500 of these businesses and asked them a whole bunch of questions about what gets in the way of you growing, how much access have you had to growth capital, what would you do if you had the growth capital? And so it was all about understanding and generating insights into what are some of the challenges and opportunities for funding this segment of the economy, which we see as super important. And so when you started asking the right questions and digging into that, we found that 79% of what we call those growth economy businesses have identified that access to funding is one of the two biggest challenges for them in terms of realising their growth potential. So that was a big insight for us.
That is a huge insight. Just before we go on, though, what was the other one, the second?
Regulation and red tape.
I suppose that's fairly predictable.
Yeah. Now, below that, there are a bunch of others that we'd all recognise. Access to the right skills and resources. But these two really stood out at almost 80%. The next one down was, I think, in the 40s in terms of the percentage of businesses that identified it as a barrier to growth. So 79, 80% of all these growth economy businesses identified access to capital or access to funding and, regulation and red tape as the two biggest barriers to growth.
So now you've identified that, you can take it to regulators and say this is an issue that we need to push along. But your organisation itself helps. Yeah,
we're trying to solve or starting to solve one of those, which is the access to capital. So then we looked at that and said, okay, so if that's one of the biggest challenges, what percentage of this important growth economy segment has sought equity in the last few years and how many have been successful? And so we identified that 35% of those businesses have sought external equity in the last few years. 53% of those were unsuccessful. So half of all those that sought equity couldn't access the equity they needed. Of the 47%, if you like, that were successful, so you go, that's a decent number, 1 in 2. But then with the follow-up question, which is where did that equity come from, 90% of it comes from family and friends.
Wow.
Now, that leads to a couple of insights. The first one is it probably means they're not getting the level and scale of capital they need.
No, and they're taking a huge family risk.
That's right. And then I think even more importantly, capital is only one of the things that these founders and businesses need to grow. So when you have institutional capital as opposed to kind of family and friends, that comes with expertise, comes with infrastructure, it comes with support on the board, all the things we provide and other investors provide that are institutional. So there is a lack of institutional capital into this market. And so then we thought that's kind of like, if you like, the demand side of it. All these important businesses to the economy, they can't get access to the right growth capital. And when they do, it's not the right form of growth capital.
Yeah. So what's the answer, Anthony?
Yeah. So they're bootstrapping their way, if you like, to growth. So then we said, okay, let's look at the supply side and see where the gap is, right? And so when you look at the supply side, actually you've had, and you'll see it in the report, we've had very strong growth in venture capital and private equity in terms of the level of capital available for investment in Australia in the last 5 to 10 years. But only 2% of that private equity capital has been dedicated to or invested in growth capital for SMEs, and only about 0.4% of venture capital.
So what are you doing to help?
That's a good question. I think the research has, in a way, validated our model, which is we're bringing this style of capital, this growth capital, to the SME or growth economy. We've got $540 million to invest. The gap is actually $38 billion over a long period of time. So what that really means is, in essence, we've identified a market failure. And when you've got market failures, you need government support and you need investors to think differently about this segment. So what we're calling for is partly more government support, which we've got in our fund because 100 million of our 540 has come from the federal government, so they're providing support. We're suggesting that we examine some of the tax incentives that exist for early stage venture capital to be rolled out for, mid-market investment. And then we're calling on super funds who typically invest more in large buyout, private equity or in listed markets to think more about this growth economy segment that's in desperate need of capital, because we have to bring in or, crowd in private capital as well as government funding.
That was Anthony Healy, CEO and MD of the Australian Business Growth Fund. This episode of Business Essentials Daily is produced by the team at SoundCartel. Thanks for listening. I'm Nicole Goodman. We'll bring you more Be Daily tomorrow. Follow @BE Daily Podcast across social media and head to bedaily.com.au for more from the Business Essentials Daily podcast. SoundCartel.